Wrap the month of November. Much, much better and much more what we want to see than August, September, and October. Let's jump into the 10 charts we're going to look at today. Well, the month of November, as we indicated before, was much, much better than the previous month. Let's jump into it. Great month, as a matter of fact. S&P 500 was up 9.13%. NASDAQ Composite up 10.72%. Small caps 9.55%. And the bond market was up 4.56%. Hey, I'll take that every month. I'm sure you would too. Now let's jump into our holdings. The SPY, the S&P 500. Cap weight was up 9.13%. Our Invesco RSP S&P 500 equal weight actually outperformed SPY cap weight last month. Yay! 9.17%. We'll take it. Vanguard dividend appreciation was up 7.49. Schwab US small cap 9.55 month of November. International did well as well, up 8.26% with our Vanguard total international stock. Schwab International Small Caps 9.37. Vanguard Short-Term Bond 1.77. Our total bond market BND 4.56%. That's a huge month for bonds. And the International Bond Fund was up 3.43%. Let's jump into how we're doing the past 12 months. Past 12 months is definitely being led by the NASDAQ Composite, which is up almost 30%, 29.47. S&P 500 up 20%. Small caps only up 3%. Vanguard total bond market 4.91%, which is a way to kind of get an indication of how the bond market is doing. S&P 500 the past 12 months was up 20%, like we said. SPY, the cap weight, 20%, 20.03%. Equal weight, here's where the discrepancy lies and why we're probably going to be making switches, at least in our IRA and retirement accounts. We're going to be swapping out RSP right here for SPY, 20% on the cap weight, where the S&P 500 equal weight 8.17%. Vanguard dividend appreciation up 13%. US small caps from Schwab 3% over the past 12 months. And again, that equal weight comes into play with small caps. Small caps, mid caps, and the non-mega caps have really been driving the market. And you can kind of see that over the last 12 months, where we're seeing the smaller companies, mid companies, the non-mega caps are really lagging behind. International, though, is 21.95. International small cap, 16.7. Vanguard short-term bond fund up 4.7 past 12 months. Intermediate bond fund up 4.91 and international up 4.98. Year to date, S&P 500 is up 20.67%. The NASDAQ Composite's up 35.92%. Schwab US Small Cap 5.88. Vanguard Total Bond Market's up 2%. Again, cap weight S&P 500 up 20.67%. This is going to be obviously very close to the past 12 months because we're all the way into November, so these numbers are going to look pretty similar. Invesco RSP S&P 500 6.44. Vanguard dividend appreciation 9.97. Schwab US small cap 5.88. International stock 10.25. International small cap equity 6.81. Short-term bonds up 3.23. Total bond market up 2%. International bonds 5.39%. Let's look into some market breadth and how our charts are looking from a technical analysis standpoint. From a technical analysis standpoint, S&P 500 is in an upward positive trend. We've got the 50-day moving average, blue line, trading above the 200-day moving average. Bullish indicator, check. We've got the price trading above the 200-day and the 50-day. Bullish indicator, check. Which really isn't a surprise based on a huge month that we had in November. Let's look at relative strength. No surprise here. Relative strength is back up to that kind of, are we a little bit, overheated? Are we a little bit, overbought at that 70 number? So again, we're kind of back up there. Percentage of S&P 500 stocks above the 50-day moving average. We're at 80%. Percentage of S&P 500 stocks above the 200-day moving average. We're at 61. NASDAQ Composite, pretty much the same story as the S&P 500. 50-day moving average Blue line trading above the 200-day moving average. Bullish indicator, check. We've got the price trading above 200-day and 50-day. Another bullish indicator, check. As you can imagine, our relative strength is going to be right at that 66 number. The percentage of NASDAQ stocks above the 50-day and 200-day are not as high as the S&P 500 because, again, more of those mega caps and few companies are driving kind of the NASDAQ. So we've got 53% above the 50-day and only 33% above the 200-day. Let's look at value versus growth. Value underperformed in the month of November by over 3%, so negative 3.11. Again, this does not mean that value underperformed in the month of November because it certainly didn't, and we'll show you that in a second. But compared to growth, growth outperformed value by over 3%. So we can see here our iShares Russell 1000 value indicator was up 7.52%, where the Russell 1000 growth was up 10.97%. How are we doing with offense versus defense? Consumer discretionary, offense versus defense. We've talked about this before. What offense versus defense means is discretionary versus staples. Discretionaries are goods and services that we do not need. They're things that are not essential, so they're discretionary. And again, in good economic times, people will spend more and stocks on the discretionary side will do better. In bad economic times, in bad market environments, people will spend less on discretionary and staples will do better because staples is stuff that we have to have regardless of what's going on in the environment. So this one, we've had discretionary, which is no surprise, outperformed staples by over 6.5%. So discretionary staples for the month of November were up 4.14% compared to discretionary was up 10.98%. Our yield curve is still inverted. Our yield curve is still inverted. As we can see here, if the green line is trading below this blue zero line right here, we have an inverted yield curve. Now it's not as inverted as it was around, the beginning of the year, but it is still inverted nonetheless. And what that means is quite simply the 10-year treasury is yielding less than our 2-year treasury. Our 2-year treasury is in red, which is yielding 4.6%, and the 10-year treasury is yielding 4.2%. When this red line here is above the green line, we have an inverted yield curve, meaning we are being paid more to go shorter out on the curve than normally you would be. This would be reversed. Well, now let's look at it on the 10-year versus the 3-month. The 10-year versus the 3-month. The 10-year treasury, like we just said, is at 4.12%, where the 3-month treasury is trading at 5. An even bigger discrepancy there on an inverted yield curve is 5.45%. All right, well, that's a wrap for the month of November. Wrap the month. Let's see how December turns out. Until next time, see ya.